Hi, I'm Max Keiser. Welcome to the Keiser Report. Not only are central banks counterfeiting fiat currencies around the world to impose austerity measures and all manner of financial repression and depression, but gaming companies are also involved in counterfeiting virtual currencies, and this is reverberating throughout the global economy. Stacy Herbert.
Yes, Max Keiser, Zynga, as we have talked about many times here, is about to go public. And they're in the headline, Max. Zynga gets pre-IPO boost from game-engrossed 30 Rock star Alec Baldwin. Apparently, Alec Baldwin was on an American Airlines flight on the runway in LAX, waiting to go to New York, and he was playing a Scrabble-like game, Words with Friends, that is Zynga's. And he got kicked off for this, and he tweeted, Alec Baldwin tweeted, "Flight attendant on American reamed me out for playing Words with Friends while we sat at the gate not moving." LA-based tech analyst Michael Pachter says this is phenomenal for Zynga. The problem for Zynga with investors has been that the average portfolio manager doesn't relate to their games. This definitely helps change their perception.
Well, how can the average portfolio manager not relate to Zynga games? Zynga's in the business of counterfeiting money. The average portfolio manager is in the business of shuffling around counterfeit money, whether it's euros or dollars, or in the MF Global scandal where they were shuffling around massive quantities of counterfeit money, or in the Lehman Brothers or Bear Stearns or AIG. It's all counterfeit money. Zynga's just a virtual counterfeit company, so no money manager in the world can't understand that business model because it's the same business model as their corrupt business model.
Well, Zynga itself took up Baldwin's cause with Twitter posts featuring the phrase #LetAlecPlay. So this looks like it's going to be good for their IPO. It might now be revalued a little bit higher. But I want to move on to another recent IPO in the tech space, and that's Groupon. Groupon allegedly hacked merchants' email to alter contract. So a federal class action lawsuit in the United States alleges Groupon altered one of its merchants' contracts by gaining unauthorized access to the merchant's stored email. The suit, filed by household construction and repair website Bid My Crib, claims Groupon surreptitiously changed a contract to extend the terms of a deal Bid My Crib had offered.
Right. Well, this is a major scandal because in the offering document for their recent IPO, initial public offering, under risk disclosures, this information material to the underwriting of that security by Goldman Sachs, JP Morgan, Morgan Stanley, other Wall Street firms was omitted. So that's a breaking of the law right there. But not that there are any laws on Wall Street. But here they are committing massive fraud again, Groupon, on top of the fraud of taking a Ponzi scheme public, pocketing billions, and leaving the carcass to rot in the accounts of pension holders all over the world that'll be forced to suffer austerity measures to pay for this massive fraud that is Groupon.
But it's also a theme that we've seen throughout 2011, the consequences of not pursuing justice against the top 0.001%, that they are able to maraud around the world, destroying economies, operating outside the law so blatantly, like a Lord Rupert Murdoch. I call him Lord, he's not really, but he is one of these lordly class. And he's like, how much more evidence do we need that the whole enterprise of News Corp was hacking phones, were hacking databases? How much more do you need before anything happens to him?
So again, you know, here you have in the UK, which is not only harbors criminals of counterfeiting, but also harbors criminals like Rupert Murdoch, who's involved in phone hacking. And so people emulate Murdoch. They want to be like Lord Murdoch, so they phone hack. So Google says, you know what, if Murdoch gets away with phone hacking, then we should be able to get away with phone hacking. So they engage in phone hacking. They cook their books, then Wall Street takes them public. They pocket billions of dollars, and the IPO is left to rot in people's pension accounts.
Well, it's trickle-down fraud, as we've covered here before, and William K. Black said this, that Bastiat is the one that said that the fraud happens at the top. And once you have a corrupt upper class that gets away with these crimes, it trickles down and you have a corrupt society, and that's how it happens. One day the UK could look like Pakistan or India in terms of the levels of corruption.
I know, it's great in India. Government issues fake money that people can use to pay off bribes without losing face.
Maybe that's a future for Zynga.
Well, I think Zynga dollars will be used, but the UK pound can be used too. It's fake money. You use it to pay off bribes.
Well, speaking of fake money, Max, this is in the next headline. DJIA, Dow Jones Industrial Average, 14,000, depends on U.S. saying we're all in this together with Europe. Never before has the euro influenced U.S. stocks as much as this year, a sign that American equities aren't going anywhere until Europe's credit crisis is solved. The so-called correlation coefficient, Max, showing how much two markets rise and fall in tandem, hit 0.85, the highest level since the euro was founded in 1999. A reading of 1 means that assets are moving in lockstep.
Right. Well, there is no difference between the euro and the dollar. They're both counterfeit currencies issued by corrupt central bankers that, as Steve Keen says, endogenously create debt-backed currency from their schwing. I'm paraphrasing, of course.
But, you know, a lot of people around the world worry about this whole new world order and a global currency. That just shows there is already a global new world order sort of currency. There is one entity, a unified group of guys who control everything. So that's why everything is moving in lockstep. They press that button to make that go up. They press that button to make that go down. You get out of line. It's a mafia racket. They wipe you out in that territory. You have shares in Groupon. They don't like you people. They take you down.
Well, this is the interesting thing about the Alec Baldwin case. It's kind of like the Julian Assange case, because Julian Assange took on corporate powers, so they cut him off from PayPal, from Visa, from MasterCard, and they isolated him. Same thing with Alec Baldwin. He made a disparaging comment against a big corporation, so the corporations cut him off. So this is where the era that we're living in. Now, you could argue that Alec Baldwin is in the top 1%. I would say safely in the top 1%, and yet he's not immune from having corporations simply delete him from the grid because they don't like what he says about a corporation. So if he doesn't have any rights as a person to speak openly, then what hope does anyone else who's not even anywhere near that level of wealth have in being able to express themselves in this economy? The answer is zero.
Well, okay, so here this headline is obviously encouraging the United States population to get behind their Fed chairman, support his drive to flood liquidity around the world. But on the other hand, of course, S&P, Standard & Poor's, downgraded the outlook for Europe. They said they might downgrade 15 European nations, including Germany. So this headline follows that, Max. German politician, Euro downgrade is an American plot. Standard & Poor's warned it may downgrade 15 Eurozone countries, including Germany. Rainer Bruderl of the Free Democratic Party said, quote, "I am no fan of conspiracy theories, but sometimes it is hard to avoid the impression that some American rating agencies and fund managers are working against the Eurozone."
Well, it's a war. It's a currency war. It's a financial war. The S&P is backing the U.S. in this war. And Germany is clearly shooting back. And there's basically what it amounts to tell you the truth, when you look at this objectively, the war ended, actually, when the financial crisis started in 2007. The thing that is trying to be figured out now is who's going to pay reparations. Who is really the loser in this war? There's about $100 trillion of debt that needs to be paid. And the question is it going to be Germany and the Eurozone that's going to pay reparations, or America that's going to pay reparations? We're not clear who's going to pay reparations yet. Both will try to avoid paying reparations by debasing their own currency, by flooding the market with more counterfeit securities and more counterfeit currency. And this is what we're into right now.
Well, my impression is that it's not a factor of, oh, the S&P is supporting the U.S. There are no nations. They really don't exist, because there might be some people who live in a geographical area, but it's a group of guys. It could be one bank. It could be J.P. Morgan. It could be a hedge fund or a group of hedge funds. Whoever's paying the most to S&P that day gets what they want. And maybe this hedge fund or this bank that they're working for today has a big short position, or they stand to gain in that case. And also, we're in this currency war that, much like the beginning of World War I, people just didn't understand the nature of the new game that we were in. And they're famously, we're right around Christmas time. What happened in that first Christmas of World War I is the Germans and the Brits put down their arms and started playing football with each other because they didn't take it seriously. It was some other guys who wanted a war, not the people on the ground. But sure enough, the hatred for each other did work after a few years of this, and the wars continue, the hot wars continued for decades after.
Because the economies kept contracting, because there's no growth, because war became the profiteering model for those who are interested in conducting more war, and they cut off systematically everything that was generating genuine economic growth. And the other thing about this in the global economy is that the emerging economies in Asia, for example, or in South America and Brazil, they're being affected by this currency war, with their currencies being debased with this hot money that's flooding around the system. So that's hurting their ability to graduate the global economy into a growth phase as well. So they're snuffing out the only area of growth that could possibly save this situation from not degrading into this huge deflationary nightmare.
Well, we are in a currency war. It is a war, so, you know, I'm going to read a headline. Be careful, it could just be propaganda from this bank. UBS's advice on what to buy in case of Eurozone breakup: precious metals, tin goods, and small caliber weapons. So this is from UBS, who's like, they're one of the shriekers wanting the Fed to come bail out everything. So they said, quote, "I suppose there might be some assets worthy of consideration should the Eurozone fall apart. Precious metals, for example, but other metals would make wise investments too, among them tinned goods and small caliber weapons." And they go on to warn that basically we could have another World War II sort of situation.
I think this is an amazing headline because UBS is a major bank, and they're basically taking the same position as Alex Jones takes in his broadcasts in the United States. And he's considered by mainstream media to be fringe with his views. However, UBS, one of the biggest banks in the world, is echoing exactly that message, that gold, guns, and tinned food is a legitimate way to prepare yourself for this collapse during this major financial global war we're having.
And then finally, Max, Mark Faber, Dr. Doom, he was on Bloomberg this week, and he was asked about this whole Eurozone crisis and what he's doing, and basically, yeah, it's going to fall apart, he believes. Then the presenter asked him, "Do you own dollars then instead of euros?" And look at his response.
Well, I have a very special stock tip for you. The symbol is GOLD, gold. That is what I prefer to hold.
Well, I'm glad he finally has jumped on my bandwagon. You know, since 2003, I've been 90% gold and silver. That's what we've been telling people to do. It's worked out this past decade. It'll work the same the next decade. Stacy Herbert, thanks for being on the Keiser Report.
Thank you very much, Max.
Don't go away. Much more coming your way, so stay right there.
Is that so much as I was about to say that.
I'd like to go former Soviet bloc.
Yeah, but real almost immediately after the collapse of the Soviet Union 20 years ago, the Commonwealth of Independent States was established. Its original intent, seen by many as
these fresh, nutritious, and delicious products are the pride of healthy eating.
We need to test these foods for toxicity, allergenicity, immune response, lower nutrition, and for environmental contamination.
Don't you feel like a lab rat? Some considered the experiment in human treatment.
Very highly significant differences between the GM-fed animals and the non-GM-fed animals.
But they weren't treated so well themselves.
One question means one career. You ask one question, you get the answer, and you might or might not be able to publish it, but that's the end of your career.
Hi, I'm Max Keiser. Welcome back to the Keiser Report. Time now to go to London and talk with Detlev Schlichter, author of a new book, Paper Money Collapse, The Folly of Elastic Money and the Coming Monetary Breakdown. Detlev is an Austrian school economist who worked in finance for 20 years, including stints at Merrill Lynch and J.P. Morgan. Welcome to the Keiser Report, Detlev.
Thanks so much. It's a pleasure to be on your show.
All right, Detlev Schlichter, what is the folly of elastic money? Why must paper money always lead to financial disintegration?
Well, the folly of elastic money is that I think today there is a widespread belief that we can buy ongoing economic growth and ultimately prosperity by constantly expanding the supply of money. In our monetary system, where money is, fiat money, it can be created by the central banks and by the private banking sector, essentially at almost no cost and therefore without limit. And our system is designed to constantly expand its supply of money. But that must lead to economic dislocations because it will constantly artificially lower interest rates, encourage extra investment and capital accumulation, a building out of the capital stock that is ultimately not funded by savings but just by printed money. And economists for a long time have shown that this must lead to imbalances in the economy. It leads to excess levels of debt. It leads to investment projects, as I said, that are not backed by saving. And ultimately, the economic boom that you buy yourself by this money creation must lead to dislocations that ultimately lead to a correction. So any growth that you buy by injecting money into the economy, you pay for later with an economic contraction.
Now, the central bank in the United States, the Federal Reserve Bank, when it was created in 1913, this was created as a way to ameliorate the boom and bust cycle, creating a lender of last resort, but it's failed in its mission. How come?
Well, it's important to note that the Federal Reserve was started in 1913 under still what was officially a gold standard. Now, please remember, in a gold standard, the elasticity of the money supply should be very limited. Gold cannot be created by anybody, and in a gold standard, money is essentially gold. But remember also that banks, the private banks, have always managed to issue sort of money substitutes. Bank deposits, bank notes, and because the banks issued them and claimed that the holders of these bank notes and bank deposits could redeem them for gold, instantly, because of that policy, the public accepted these money substitutes, if you like, in place of gold, used them as media of exchange in the economy, and by doing this, the banks actually allowed the money supply to expand. And this caused exactly the problems that I just explained. But of course, the banks enjoyed the privilege of printing these money substitutes, and the politicians also liked it. So the idea of having a Federal Reserve, of having like a government backstop, was designed so that when the credit boom would lead into a credit bust, as it must, as I just explained, when the credit contraction sets in, the Federal Reserve would provide extra money to the banks. What that caused, in fact, was that the credit boom was extended even further, and we all know after the Fed was founded in 1913, this encouraged very much more credit expansion, more bank credit creation, and to a large degree led to the credit boom of the 1920s, but again, dislocation, imbalances accumulated, which caused then the Great Depression in the 1930s. Now, obviously, the ability of the Fed to again encourage the banks to further extend credit creation and avoid the correction was limited because the Federal Reserve was tied still to gold. So in 1933, the gold standard was abandoned, and now we have, in the meantime, moved to a system in which the Federal Reserve can create bank reserves, which used to be gold. Now they're just simply money that the Fed can create at will and literally out of thin air. So over time, we have made our monetary system ever more elastic, if you like. We have designed it in such a way that it can create ever more money in an attempt to extend these credit booms ever further.
All right, so in the Austrian school, the Depression in the United States and around the world in the 1930s was caused primarily by the credit expansion in the 1920s. This goes against the prevailing theory of people like Ben Bernanke or Paul Krugman at the New York Times, who believe that the Depression was not caused by a credit boom in the 1920s, but caused by policies that came in after the crash. So your thoughts?
I would say the following. If you look at such a crisis and such a recession, it is very clear that at the starting point of such a recession or depression, the economy must have accumulated massive misallocations or imbalances. And the question for us economists is, how can an economy get itself into such a position that it has these massive dislocations, that obviously for an extended period of time so many people made wrong decisions and allocated capital incorrectly, overextended bank balance sheets. How could all of this happen? And I think one of the criticism I have of the interpretations of Bernanke and other mainstream economists is that they always focus on this thing of lack of aggregate demand. They're focused on a symptom of the crisis, but they cannot really explain how this imbalance came about. And I would argue that the Austrian school is here very superior, and I think by using the credit expansion, the artificially low interest rates, and the artificial boom that is generated by bank credit expansion is a very powerful explanation of how economies get into these situations where then ultimately a recession is unavoidable.
Right, and right now, of course, it's becoming more of a question, going back to this question, because as the economy continues to suffer, there's a talk now of going back to a gold standard, and the people like Krugman or Bernanke, you think that the gold standard caused the depression, totally disregarding the incredible bubble of credit of the 1920s, whereas other folks are pointing to gold and saying, look, it's the only real system that we've had that's been consistently workable over the years, so it's becoming more of a factor. But let's look at Europe for a second, because you've got the Tim Geithner and his school of ever-expanding debt, and to promote quote-unquote aggregate demand, trying to push Merkel and the Bundesbank around and the ECB to expand money supply to mimic the problems of America. Germany doesn't want to do that. And then you've got, of course, David Cameron in the UK, who's defending the turf of the corruption in the City of London. You know, AIG, Lehman Brothers, MF Global all went through David Cameron's City of London. This is the global headquarters of fraud, so he's trying to protect his turf. How do you see this Europe situation going forward? Because it's really a clash between these two schools of thinking, isn't it?
I mean, before I say more about Europe, I mean, as you said before, there is this debate now about a gold standard, and has the gold standard caused the Great Depression? I mean, it's very clear in my view that the gold standard has not created the Great Depression. What has been the case is, even under gold standard conditions, bankers and politicians, and the two of them work together here, as they do today, want to have ongoing credit expansion. It's very profitable for the banks. Obviously, politicians want it for obvious reasons as well. You can run much larger budget deficits. You know, the state, for the last 30 years that we have a complete fiat money system around the world, states around the world could accumulate huge amounts of debt and fund a lot of their spending, not via taxation, but via constantly borrowing money. So states and banks hugely benefit from the system of fully elastic fiat money, but it is very clear from the Austrian analysis that you reach some kind of endpoint here, that you cannot push the system out ever more. At some stage, you have excess levels of debt, you have overextended and weak banks, you have completely distorted asset markets, and at some stage, the system is craving a correction, you know, a deleveraging, even defaults, and sort of some sort of liquidation of these accumulated imbalances. So how does it play out in Europe? I think the only alternatives you have is you stop printing money and allow the market to liquidate what the market ultimately perceives to be, unsustainable. The extent that we have accumulated debt is completely out of line with underlying private savings, true savings, and also with the underlying real income streams. So you allow the market to correct, like we've seen in the case of Greece, which I argue is painful. It is very painful. But the alternative would be you print ever more money, ever more aggressively, which then destroys the entire currency system. I think the problem in Europe is simply that I think the German position tries now some kind of middle way in which you do not default, but you don't print money either, in which you try to cut back budget deficits as quickly as you can to build confidence in the market again.
All right. Well, let me just talk about the Austrian school itself. Now, Karl Menger, the founder of the Austrian school, he was one who posited that economics itself is not to be viewed as a hard predictive science like physics or chemistry, where the point is to be able to predict outcomes by having a hard set of formulas, etc., but that economics is more of a science of self-knowledge, that our experience as human beings in our quest for self-knowledge is the school of economics that he founded, and that by understanding this, you can understand more how economics works in society and going forward. Is this is obviously a radical school for some. However, it seems as though its time has come again, because the folks that are running these global economies seem woefully inadequate in even knowing their own motives. When you talk to John Corzine of MF Global, he doesn't seem to understand that he stole $1 billion. He has no self-knowledge at all. He's a sociopath. Maybe he needs to visit an Austrian school to understand at least himself. Your thoughts?
I think I like your description very much. I do think, yes, I think the Austrian school starts with the individual, human actor. The Austrian school is very clear that economics is not like natural sciences. Absolutely correct. And I do think a lot of the problems that we face now in the world, and that I think even modern mainstream economics is in fact in crisis, because it's very clear. So the strands of mainstream economics that have developed over the last 50, 70, 80 years, and that dominate academia, and that provide the theories and knowledge for all the central bankers and the financial bureaucrats around the world. One of the problems is that these theories try to mimic the natural sciences. They treated economics as something like natural phenomena. And how do you deal with natural phenomena? Well, you have to observe them via statistics. You take data points, historical data points, and then you try to find patterns. But the difference is, if you look at economics, is obviously a social science. We are dealing with human beings here, and we are humans ourselves. So when we look at the economy, we can understand the motives of the actors. We know why people trade. We know why people save. We know why people prefer to use money rather than barter exchange. So by understanding purposeful human action and building economic phenomena from the starting point of the human actor, we can build a better understanding of the economy.
All right, we're out of time. Detlev Schlichter, thanks so much for being on the Keiser Report.
It's a pleasure to be on your show. Thanks so much, Max.
All right, that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Detlev Schlichter. He's the author of Paper Money Collapse. You can also find his personal website at papermoneycollapse.com. You can follow us on Twitter or Facebook. Just look up Keiser Report. Or you can send me an email, keiserreport@rttv.ru. Until next time, Max Keiser saying bye, y'all.